Good morning, traders, and happy Friday. Bonjour or bon après-midi. Guten Abend, guten Tag, and all the rest of it. A small world. It is 8:01 a.m. Chicago time on the 23rd of September, 2022. This is episode number 2321. Thanks for joining me today. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. What do we got? What do we got? What do we got this morning? So, this morning, they're running for the hills. It's just yesterday was completely balanced after dropping. Yesterday was actually weak balance across the board. And this morning they're just running for the hills here, including crude. Look at that crude go breaking the $80 barrier, which I've talked about in the CT Mavens channel to say that it is struggling to keep lower prices. It's struggling to keep higher prices. But still, crude is still in a wider balance. Don't get thrown off by this 4% drop, although it's a pretty decent gap down now. The overall market posture is risk off, pretty decent risk off, strong risk off. The German and European indices are down over 2%. The S&P down 50 points. We're approaching the 3,700 handle, and we'll look at the technicals of that. No significant news other than Great Britain, the UK, released a mini budget, which is expected to stimulate, but given the inflationary environment, it is causing yields to go up. And even though it's causing the yields to go up, the currency is actually down. The market seems to be losing confidence in any fiscal action. And why not? There's so much fiscal action and so much money gushing through the system over COVID that it's very likely that it'd be seen as adding to the problem as opposed to taking away. Hong Kong is removing restrictions on quarantine, and so hotel prices are spiking. And if China takes its restrictions off as well, if China takes off its restrictions as well, then that's probably inflationary. Also, China is the only place that is experiencing negative inflation currently. So, in addition to that, the European flash PMI numbers came in weak. The French manufacturing PMI came in at 47.8. It was expected at 49.7. That's pretty significant, 2 whole points below. The services PMI came in at 53 versus 50, relatively strong. The German manufacturing PMI came in at 48.3. Although it beat the forecast, it's still much lower than the prior, which was 49.1. And the services PMI in Germany is way off, 45.4 versus 47.5. And the European services PMI as a whole came in at 48.9 versus 49.2. The prior is 49.8. So it's definitely recessionary. And other than that, there's really not much to report. We do have Fed's Powell today at 2. So the market will be very interested in that. Before that, we have the U.S. flash PMIs, the same as what we had in Europe, at 945. So this is what things look like this morning. How are you? How are you holding up as a trader? How are you holding up? Are you balancing your non-trading activities with trading? Do you feel, have you been beat up this week? Do you feel very emotionally wrecked this week with the FOMC and everything that's going on? How are you doing? Hopefully you're taking care of yourself and always giving yourself another chance tomorrow by managing your risk first and foremost, no matter what you trade, whether it's equities, futures, CFDs, Forex, crypto, whatever it is. Hopefully you're taking care of yourself. There is no amount of money is worth your health. No amount of money. Many examples of that in history, the most prominent of which I think is Steve Jobs having some $9 billion and then contracting cancer, and his $9 billion could not save him. Not that he didn't do what he could, I'm sure, but it's we're trading with capital here. We're in the capital markets. Don't forget to take care of yourself. Okay, so if you haven't been, make a promise to yourself starting this weekend to drink more water at a minimum, or to go for a walk, spend 20 minutes or 30 minutes walking, spend time away with family. Do what it takes to feel good about how you spent your time on this little blue planet that we're temporarily on, and don't get caught up in the myopia of work and trading and whatever else is going on in your life. Okay. Just think of how small we are compared to the universe and to outer space. So just a word of inspiration there. Just wanted to remind you that there's more to this, and it's important to just keep focusing on risk, keep being aware of your emotional condition, and to take care of yourself. Looking at the S&P, now that I'm done preaching about your health, not that it's any of my business, but we're all humans. We're all here together. It's a small place, so I do care. Let's look at the S&P for a moment. I'm going to go over the stats on the chart, on the summary sheet here first. The market is in a trending condition in the S&P. It's trending down. The volume is quite high. Yesterday's volume was quite high as well. 387,000 yesterday. We were at 404, something like that at this point. 82% of the inventory short, and the range is 68 and a quarter. If you recall yesterday, the range was 66 points. What this tells us, what this informs us is we're opening out of balance. One, we're opening out of balance. We're opening below the prior range, which opened below the range before that. Sellers are in strong control on the daily time frame as well as the weekly now, and overall, we have a market that is not able to keep a bid. We saw that yesterday. The lifting could not hold prices as hard as it tried. And so gap rules apply this morning. So we do not fade a gap. If it does not fill the gap immediately, we do not we do not fade the trend of the gap. The trend of the gap is down. So now we need to come in suspicious of long positions. That's the first thing we're going to pick up this morning. We have traveled to the lows of almost the lows of June. We're almost there. I talked about that yesterday, and the volume is high. The range is high, which means that the open is likely to be quite volatile and aggressive. So be prepared for that. Be prepared to watch to see if responsive buying, given the inventory is not 95%, not 100%. The inventory is short, but we want to see they have that on their sides, that the inventory is short. And if they're not able to push higher on the open and hold those prices, push to at least 37.50 this morning and hold those prices, then we have an edge in going short, as there isn't enough to rebalance the inventory to push those late shorts out. Okay, so we're moving with the trend when we go short for today. 37.20 is the point of control. Is it set the low of the range? The range has a weak low. So let's look at the charts real quick. Actually, just before that, let's take a look at what was expected yesterday. Here's what I showed yesterday. Yesterday, if you recall, I said we are opening just outside of the range. We're opening at the low, and I said watch that 38.20 to 93. No action within the 20 to 93. This is a zipper that I'm going to stay out of. Uh, and if it breaks the 93.67 or 66.75 more precisely is a key target, that'll be the overnight low. And then I'm expecting, just like it says here, if it breaks the 67, I'm expecting 50 next, 37.50 next. I want to bring your attention to the overnight low of 37.15. So we did break the 67 yesterday. We went to 63 and it just balanced there and rallied. But overall, the job got done, not in a pretty way, but the job got done nonetheless. So this is one aspect. The other aspect I wanted to share with you is right here. Okay. And what I talked about right here is that compressing these profiles together. I took several days. So this micro composite here that I showed yesterday starts on the date shown at the bottom, the 18th. Okay. And I've compressed all of those days together because we've been in balance. So we've compressed these days and we find that 38.75 is the point of control and the profile is very balanced with a tail at the bottom. Therefore, if we don't get back above that 38.3275, as long as we don't get back above that 38.3275, then we are likely to explore lower. That's what I was saying yesterday. There's a lot of overhead resistance here. The path of least resistance is down, and now we've moved lower. This is not to say I told you so. This is just to say here's how things were structured, and here's how they ended up. So this is what happened yesterday. We moved right back to the low of the prior day, basically. We pushed right back to 38.0675. We pushed to the prior settlement and close, and then we found sellers, and we balanced yesterday with a range extension to the downside. And then this morning we're trading way down here. So this is absolutely shorts are in control. The Fed doing the job that they've promised to do. Surprise, surprise. That they've promised to do, which is to push prices down and to in order to reduce inflation. So we're accomplishing quite a bit here. So this area now, 38.05, just like 39.05. You see how these prices repeat? The 38.77 yesterday, 37.77 was the LIS for a lot of the session. The 39.05, now 38.05. There's just a lot of repetition, that goes on, and to me, this isn't likely to be done. For that reason, I'm going to bring up the ES composite chart. Come on, baby. Come on, baby. So the ES composite chart, does this chart look awfully confusing to you? Yes, it has quite a bit on it. It informs a lot. This is kind of my bigger picture chart. You can see that the low of the range, is 36.57 and a quarter. That's the key swing low of this area, and we're making our way down. So what we've done overnight is we've cleared this key low. Very important low here at 37.42. We've cleared that, and we're moving into the 2 days of balance. Okay, so there are 2 days back here that are on top of each other with a point of control at 36.95, and to me, this is where we are. So what we have to do then, so knowing that, one second. Knowing that, let's pull up the trigger chart and go to those days. So the 26th, the 16th of June. So let's go to the 16th of June, okay? Let's set the... So looking at the bottom, the 16th of June, that's actually outside of my tick data that I'm retaining. So it's going to get funky. Yeah, it's just outside of my data. Yeah. Let's pull it up on the intraday. Let me pull up the intraday chart. ES intraday. Okay, here we go, 16th. So this is, I don't have that data still. I need to import this data. It's unfortunate. We're not able to look at it this morning, but what we're supposed to do, what we need to do is go to June 16th and 17th and look at the structure. Where did the market struggle that day? Where did it accept? And so on. What is the extreme high? And it's not as simple as looking at the high and the low of those days because we know what those are. But it's important to go back to those days, and I'll need to pull in more data to get to those days. In fact, let's just switch to, say, a 15-minute, and I'll get that data. And then that starts to inform areas that the market is likely to test, okay? So what is going on here? These prices. Here we go. There it is. These are the 2 days. So if we look at the RTH only, so I'm switching to day session only. It's got to recompute all this stuff, so hang in there. I know this is taking a while, but it's important to be aware of what the market is doing. So these are the 2 days here, and we're going to look at these profiles and look at where market has found support. So you see immediately, I notice the 3709 right there. These are, if these prices look different than your charts, because these prices are roll back adjusted, yours may not. The other price that I'm seeing here is around 3682. 3709. So let's put that on here, 3709. Okay, and we're inside of the 3727. We've pushed that. We went to 3715. So we stopped somewhere in here in the overnight session. Just be aware of what these days look like. Balanced days. I can throw a profile on here to see what the composite looks like. There we go, and the composite profile point of control is 3693. That's the number I was after earlier. So that's the big picture. What are we doing in the short run? In the short run, really, the overnight structure, in my opinion, is not very good. I mean, I see that there may have been an opportunity here, but really can't tell. This thing is running with very poor counter rotations. This is our best counter rotation so far. As I said, the inventory is quite short, so the expectation is it's likely to push back into the 50, 51. What do we have here? We have a stock zone in the 44, and then we have the mid at 49. So I'm expecting it to push back up to that 49 area. The profile is nondescript. It's a trending profile. There's not much there for us to work with. The overnight low is quite a ways away from here now at the open, but it's not far enough that it's outside of the day's range at 37.15 from 37.35. Just 20 points, we can hit that very quick. In just 2 moves, we could be down there. So this morning, it's really important to watch to see what it's likely to do. I don't have any clear scenarios this morning except for the retest of yesterday's low and a return to settlement. So we have a gap to settle situation. We're in a gap. We're in a gap move, and so you have to be very cautious with buying this morning. If it exceeds the 50, so if it pulls up to the 50 and is unable to get below it, then it sets up a long for me and the long target will be prior settle. We'll see how it does, but yesterday's close was quite bearish, and that'll be a key play. If it pulls back to the 50 and is not able to hold it, it's very likely to do a gap to settle trade. I'm going to sit out the rest of this. If it pushes into the 50 and is unable, any pullback to the 50 that's weak sets up a short. The short will target 37.15, and then we're looking at that 37. Remember the price that I just pulled, 37.09. And if it breaks through the 37.09, then we're moving to the point of control of that area, which is 36.94. That's the balance target. That'll be the 2-day balance on that other chart that I posted. Right there, 36.93.75, call it 36.94. So that's how it plays. If it moves, if it is not able to exceed the 50 and it starts to push down, I'm targeting the 15.09.94 being the key extended target. That's where the market's likely to just slow down. If it pushes up higher and it breaks through the 50, it's likely to struggle quite a bit. If it breaks through the 50, then I'm looking for a weak pullback to the 50, watching order flow, watching it hit the bid, hit the bid, hit the bid, not get any price movement. That sets up a long, and the long is looking for yesterday's low and more specifically, the prior settle. Those are the two key plays this morning, okay? So I want you to think about what market might do and how you'll respond to it. And that's how you become mentally prepared to put on a trade and just wait for that to show up. Okay, don't anticipate. I'm not going to sit here and go, oh, it's going to go test the 50. Let me get long now. No. I know that's how a lot of people trade, and it's a costly way to trade. It's a very, very amateur mistake, and I understand why it happens, because you think you need to trade your ideas about the market. No, you need to have an idea about the market and then trade what the market says it's accepting as an idea. Do you see the difference? There's a nuance there, and I'm going to have to repeat that probably a couple thousand times for everyone here to get it. Don't trade what you project onto the market. Don't sit here and go, oh, it's expected to go to 37.50, so let me get long. No, you're looking for that. You see that as an idea, but you're looking for actual evidence that the market supports a bid or is keeping a floor on lower moves, so you can get long, and that your idea is it'll likely push to 50, so you'll get out at 50, getting in somewhere before that. Two very, very, very different things, okay? So as soon as you start to project what you think you should see, things get expensive, and it's a very common issue, okay? Hopefully you watched yesterday's scalping webinar. The link, I really recommend that you watch it. A lot of people are being enticed into scalping by various software vendors and online screen sharers and stuff, but you need to be prepared. You need to understand what you're getting into. The link for that was go to ct.pro/scalping, lowercase scalping public webinar, or go to my Twitter stream at twitter.com/futurestrader71 and scroll through and you'll find a link. Hit it. Please watch the video. I share a lot. I look at setups. I look at ways to approach scalping and everything that goes into it. Did some financial planning or calculating to show you how pricing structures make a big difference and how a good broker makes a big difference if you're a scalper, okay? Good luck, and I'll catch you on Monday. Have a great weekend, and watch your risk today so you can enjoy your weekend. Good luck.